morning, Trinidad and Tobago, and welcome to the Bourse Report. It's a bright and sunny Monday for the most part. And today we are talking about the energy sector and the lone stock on the energy sector of the Trinidad and Tobago Stock Exchange. We are taking a look at its financial results, and we're talking, of course, about Trinidad and Tobago NGL Limited, or TTNGL, for its 6-month period ended June 30th, 2020. And we're also taking a look at the broader energy sector space, given that, well, knock on wood, the worst seems to be behind the energy space with prices recovering. What does that mean for TTNGL as well as the country as we approach our budgeting period and the reading of the fiscal 2020-2021 budget? So let's take a look firstly at TTNGL, and for that 6-month period ended half year 2020, the holding company would have reported an earnings per share of just around 9 cents, which is a roughly 80% decline from the 47 cents recorded in the prior comparable period of 2019. Now, share of profits from its sole investee company, which is, of course, Phoenix Power Gas Processors Limited, or PPGPL, would have declined just around 80%. No surprises there, from $73.8 million to just around $15 million. Nothing much else to talk about throughout the income statement. So profits for the period would have declined at 80.2% from 73.4 to 14.5 million. Now, the big story, of course, with TTNGL has been declining product prices in an energy environment that has been severely affected by the fallout from COVID, at least in the short term, as well as declining production. So let's take a look first at historical product prices. And of course, TTNGL would produce propane, butane, and natural gasoline from the gas processed and the NGL liquids extracted from that particular stream. And as you can see, propane prices would have been hovering throughout the latter half of 2019 at around 40 cents per gallon, and capitulated to a low of about 20 cents per gallon before recovering towards the end of the second quarter. Now, importantly, beyond this, the reported date of June 30th cutoff, which is outside of the highlighted period, we can see that there has been some stabilization and improvement, in fact, in propane prices. At the end of August, it was averaging around 51 cents per gallon. So some positive news there, and a similar case would have been seen with butane in this blue line, falling from around 67 cents at the start of 2020 to a low of just around 29 cents, and has recovered since to just around 60 cents. And natural gasoline in that pink line would have fallen from just around $1.12 per gallon to as low as around 43 cents or thereabouts, and has recovered nicely. It's just around 88 cents per gallon as at the end of August. So we can see that it has been a challenging first 6 months in this highlighted area in terms of product pricing for TTNGL. But the good news is that so far for the third quarter, there seems to be stable and slightly improving prices going forward, which could bode well for earnings, or at least earning expectations in subsequent quarters. At the production level, it hasn't been as rosy a story after 3 consecutive 6-month period of increasing exports in that pink column from 4.4 million barrels to around 4.5 million barrels in the first 6 months of 2019. Exports of NGLs would have decreased just around 15% to around 3.8 million barrels for the first 6 months of 2020. Production has also been on a decline, as we can see, with natural gas volumes a little bit on the constrained side overall for the Trinidad and Tobago economy's production. And as we can see, average prices, if we take an equally weighted basket, would have decreased from that peak of $1.12 at the half year on average prices for 2018 to its current level of around 54 cents per gallon. Again, this is an equally weighted basket, and it doesn't necessarily reflect the production basket that PPGPL and by extension TTNGL would be exposed to. So at a price of just around $16.14, and certainly investors have seemingly been shying away from the stock, and that would have been largely driven by dividend uncertainty. The final dividend was cut 75% from $1 to 25 cents, and there has been no speak of an interim dividend, which suggests that no interim dividend is going to be paid. TTNGL is trading at a price earnings multiple of 35.1 times, with a dividend yield on a trailing basis of 1.6%. Now, it comes as very little surprise that the company would have taken this step, given that it's in a highly cyclical industry, that is energy and the energy sector, and that most companies, even in less cyclical industries, would have opted to take the safe route or prudent route and reduce or even eliminate, in some instances, dividends, at least until there's more clarity because of what is going on with TTNGL. So on the basis of stabilizing product prices, dividend uncertainty, but again, tempered again by muted economic activity, Bourse is going to maintain its neutral rating on TTNGL for the time being. Now, at a broader level, and we've taken a look at the NGL subsector of the energy basket being produced by Trinidad and Tobago, we can see that energy prices overall have been challenged. And if we take a look at this next graph, we can see that natural gas prices on average have been consistently falling from a peak of average $3 per MMBTU in 2018, and that's Henry Hub prices, to $2.50 in 2019, and currently is around $1.90 on average for the first 8 months of 2020. Now, the good news is that natural gas prices have improved to around $2.60 per MMBTU since then and are hovering around that level. But WTI prices and Brent, which is the crude oil prices, have fallen significantly and stayed down roughly about 35% lower when compared to 2019's average of around $57 per barrel. They are currently averaging just around $36.7 per barrel. So some way to recover in the oil and natural gas, which are the basic energy commodity space in terms of pricing. When we look further downstream, ammonia and methanol, some derivatives from our natural gas streams, we can see that prices, they have also been quite challenged. Methanol, for instance, would have averaged around $474 per metric ton in 2018, and that has declined consistently for the first 7 months of 2020. That has averaged just around $289 per metric ton. And for ammonia, it has continued to languish since 2015 and would have fallen from $268 per metric ton in 2018 to just around $191 per metric ton in the first 7 months of 2020. So certainly investors can see that these sharp declines in prices would have overall influenced some of the plant closures that would have been reported over the past few months. Now, the good news is the energy commodity price index has been recovering, and this is published by the Central Bank of Trinidad and Tobago, which takes a look at roughly 10 of our major energy exports. And we can see that after hitting a low of just around 40 back in around May, that is, it has recovered to around a level of 60, but it's certainly well off those peak levels of a 101.5, so just around 40% below those peak levels that the country would have enjoyed overall over the past in recent times. So certainly a challenged energy outlook for the country as a whole, not just TTNGL, and it will have an influence on what is going to take place or what is going to be read certainly in the budget for fiscal 2021. And next week, we start our look wholesomely at the revenue and expenditure and investor considerations for the budget right here on CNC3. And that's it for this week's edition. For more information, you can give us a call at 226-8773. You can check out this publication as well as all of our other publications on www.bourseinvestment.com, as well as in the Trinidad and Tobago Guardian. And of course, if you have any questions or concerns, please give us an email at invest@boursefinancial.com. That's it for this week. Have yourselves a wonderful week ahead. This has been the Bourse Report.